In this video, I'm going to do analysis on gold to see what we can anticipate for the next week. And as always, I will use two time frames: the higher time frame, which is the daily time frame, and the lower time frame, which is the 30-minute time frame. I always use the daily time frame as my highest time frame because I want to see what's happening in a bigger picture. And then I will switch to 30-minute time frame, that is a low time frame, where I will look for entry confirmations and execution. So I will start with daily time frame. And the first thing when you do analysis is to look on the trend. If you fail to identify a trend, then you fail to do analysis. So the first thing to do is to identify a trend. And I'm going to use high time frame, which is the daily time frame, to see the bigger picture trend. So for this scenario, we see that price was previously moving in a downtrend. And this here was our latest higher low before price. Our latest lower high before price changed the trend. So this was our latest high. Then after this, price broke this high and went up, which means that it is possible a sign for the trend changing to the uptrend. But we always know that after a break of structure or after a break of high or low, price is more likely to revisit the level, to retrace back to supply or demand levels that caused the break of that level. So actually we can see here, if we look at this chart, we can see here we have several levels of demand level where we can expect that price can give a reaction. We have this first level here and this level here and this level here. These are the levels of demand which we can anticipate that price can give a reaction and continue going up. But as we know that these two levels are not very high for wheat levels. The reason for this, I think I've explained in my my ebook. If you don't know what I'm talking about, you can read on my ebook, The Market Wolf. I've explained why these two levels are not very strong. So this one here is our strongest level, then followed by this, and then this is the last, the least level. So as you can see now, price is at this level of demand here. So we are going to see what will happen to this level. If price give us a reaction at this point, we can anticipate to take a trend from this point and we can buy it. But we know that this level is not a very high probability level. So we'll be looking for very clean confirmations before we take a trade at this point. And if we switch to, because now price is already at the this daily demand here, which we anticipate for price to give us maybe a push to the upward because we are in the uptrend. So we'll switch to 30-minute time frame, where we actually look for entry levels and something like that. So this zone you see here, this is our daily, this is our daily demand. So what we do here, we look now, we look for the 30-minute trend, like this one here, you can see it's also been bearish. And what we do is we look for a possible break of structure and change of trend in this 30-minute time frame here. So possibly what we can anticipate from next 2 weeks, maybe if price, this is our latest low, then if price give us another lower low to downward, then break this low, creating us a level of demand at this point. If it creates a level of demand at this point, then we can wait for a pullback to this point, and now we can take a trade at this point here. We can take a buy from this point here. So this is how I easily plot my entries on low time frame. I wait for price to reach the high level, the high time frame level like this one here, which is the daily demand. Then you look for switch to 30-minute time frame, where I look for shift of trend, break of structures, where I can get a valid entry to take my trade. So for this scenario, I would consider price breaking below this one here, creating a lower low at this point, then pushes up, if it successfully breaks this high and it traces back to our previous demand, which we form here, consider this as a valid entry, and I will take a trade from this point. Yeah, so that's what I anticipate from gold for the next week. Actually, we'll be monitoring the price changes and the market structure changes from the next week. But for today, this is what I'm anticipating to see from the next week. And if price will go according to the plan, then I'll be looking to take trades based on what I have explained here. If you guys would like to learn more about supply and demand, I have a PDF which I've actually explained all the concept of supply and demand. From basic to advanced with plenty of examples, as you can see here. It's called the market wolf, and have explained a lot of concepts, starting from the introduction to advanced concept, to market cycles, a lot of things about supply and demand I will explain here with plenty of chart examples. So I would recommend it for anyone who would like to learn supply and demand, whether it's a beginner or advanced trader wants to sharpen your skills. I can recommend this ebook, which I've explained based on my own experience and my own work on the chart. So it's something that I can recommend to anyone who is looking for to learn supply and demand trading. It's a very simple strategy, simple book, explained in a very simple way, and it's very short. It's not boring. So for anyone who is interested in this ebook, you can leave a message in my in the comment below, or you can check in the description. You can see my link to my Telegram, and you can send me a message from there. So this is what I'm anticipating on gold, and thank you.